First on our list is Micron, Micron Technologies. This is a semiconductor company. It's a chip maker. It makes chips like DRAM, for example. And on Thursday, let's look at the daily chart on the right. It had a beautiful breakout on a bullish engulfing candle plus 5% on high volume. Look at this volume. It's twice the average volume, and when stocks break out on high volume, that's a confirmation signal. It means there's a lot of bid under the stock. That drove prices all the way up plus 5% on Thursday. And guess what? What's even better? Look at the tail. The tail on this candle is very, very small. And guess what? Let's look at the intraday. Why is the candle small? Why is the tail small? Because intraday, after the breakout, Micron tried to fade down. However, 74.69, this level was a previous all-time high. It held this level perfectly intraday on the 5-minute chart, and bam, bounced and closed above 74.69. It closed above all-time highs. That's a very, very strong, another technical confirmation signal. If this tail were longer and this on the 5-minute chart it closes, if it closed below 74.69, then we have a different story. Then it could be a potential breakdown once it hit resistance. However, it closed above resistance. Very, very bullish engulfing candle. MACD about a crossover on very high volume. This looks very good on the technical side. But even aside from that, remember, chip makers like Micron, TSM, Intel, AMD, AMAT, these semiconductor stocks are very cyclical. What do I mean by this? Let's look at the monthly chart. Look at how cyclical this industry is. Up, down, up, down, up. And why is it? Because of the supply-demand issue. There's so many competitors in this area. They overproduce, and as a result, there's a lot of supply. Supply outpaces demand, so price goes down. As a result, they're unprofitable, and stocks go down. However, right now, we're on the up cycle of the cycle. Up, down, up. If you look at the DRAM prices, the RAM prices, they're all going up. Demand is far outstripping supply right now. So as a fundamental perspective, Micron looks very good as well. And it looks even better, again, on a daily, on a technical perspective, looks very, very good. And this is our number one stock to watch next week. Alright, next on our list is Peleton Interactive. They sell home gym exercise bike machines with live videos with some instructors. But all you need to know is the word home gym. And guess what? Home gym in COVID-19, easy money, right? That's what happened. We look at the levels around March, right? Pre-COVID-19, it was around $30, trading around just $30 a share. Guess what? After COVID-19, throughout COVID-19, it has grown to $160, $170 at the highs. Right, it has grown tremendously. However, it's on our watch list not to buy up. We are bearish on it. We're thinking it's going to go down, and we are going to short it next week. And now let me explain why. First, from a fundamental perspective, let's dissect this recent run upwards, right? So at earnings, it gapped down. Why did it gap down? Because in the earnings report, the executives, the CFO, said they're having supply issues. The materials needed to make those bikes are in high demand. They're very short on it, right? Everyone wants it. They can't get it. And there's approximating that supply won't get back on track to meet demand of the bikes until at least 2 or 3 quarters. Quarters, not weeks, months, quarters. 2 quarters is half a year. So of course it gapped down. However, it has run back up in the past month from around 100 to 160, 50% gain again. Now why is that? The answer is there is no reason. It's just technicals. It's the money flowing into growth stocks, right? This run up is not because of any fundamental reason about Peleton. For its worth, COVID-19 is gradually dying down. The numbers aren't, of course, but the vaccine is rolling out. There should be no reason for it to run up. But this ran up because of money flowing into short-term smaller cap growth stocks. For example, Chewy, which sells it's Amazon for pads basically. We see a similar price action, right? In the past month, rapidly break all the way up to 110 from around $60. Same story here. What else? Let's look at Fubo. Same story. This is even more dramatic, right? From 12.16 to 12.22 in a week, going from $30 to around $60. Double again. Also, same story with Etsy, right? This is November. Gain all the way from 130, 120 to 190, 200 until the breakdown. These all look the same because they're in the same category, right? So in the stock market, money rotates from sector to sector. And last month, this sector was very, very hot. Some money goes in, the more money goes in, the more money goes in, more money goes in, and then until here, it gaps all the way up to 160. Right? That's why we're shorting Peleton, especially now other stocks, because it's gapped up recently, and there's a huge gap here, ready to be filled. If you look at MACD from green, look at this huge green. It's at 13.36. There's so much room for it to fall down. And guess what? From a technical perspective, there is no short-term support. Support is all the way down here, around 140. It's at 150 right now. There's $10 more for it to fall. Some might argue, wow, Tobes, it already had a negative 6% day. It already had its gap down. Well, not gap down, but it already corrected. But no, that's not correct enough. That's not enough correction. I mean, in a month, it went from 100 to 160, 50%, 60% gain. So 6% loss correction is not a correction at all. And this is further cemented by this bearish flag technical signal. What this means is a bearish engulfing candle followed by a few weak attempts to gain back the loss of the bearish engulfing candle, but fails to do so. Guess what? This looks exactly like it. Exactly like it. After the bearish engulfing candle, it had a doji, spinning doji, usually a reversal signal. But guess what? The next day, it only gained 3%. It has to go. These patterns were reversal patterns. The green candle after the doji should go at least break 50%, pierce through 50% of the red engulfing candle. That's not what happened. Third day, barely any progress at all. It means it tried to bounce, but no one wanted to buy it. This story is exactly reflected in the volume. Look at the volume here. So low volume. No one wants to buy this shit. This stock. No one wants to buy this stock. It's going to go all the way back down. Not going down to 100, of course, but it's going to go to a reasonable support level where people find, oh, wow, okay, this is the value here. But here, right now, it's still too high, and that's why we're shorting it. We're shorting it next week into a possible support level at 140, 145. And let's look at Fubo. If you think stocks can go down, look at Fubo. Down, 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 keeps going down, try to bounce, couldn't bounce, bam, even more breakdown. If the bounce doesn't happen, there's no bid under the stock, it just keeps going down until people find a reasonable level. For Fubo, at least, right now, we're at a support level. This is a possible entry. However, look at the volume here. There's so much selling pressure volume. Because if everyone sells, everyone else is going to sell. And this, we're going to wait until the red candle volume goes lower. Or at least we see a green candle to enter. But that's Fubo. That's another case. Right now, we're focusing on Peleton. And this just speaks to how this attempted bounce failed dramatically, and now it's going to go down even more. We're going to short this. And that's it for Peleton. Alright, next we have Walmart, WMT. I like Walmart not only from a short-term technical perspective, but also a long-term fundamental strategic perspective. What I'm saying is, Walmart is trading like a grocery store stock. Right? It's no longer just a grocery store. COVID-19 last year has forced Walmart to adapt strategically, and now it's heavily investing into tech and its online presence. Some examples are the rollout and introduction of Walmart Plus. Walmart is transitioning from a grocery store to something more like Amazon, right? Walmart now only also partners with Bluebird to serve as a financial bank in some rural areas as well. All this speaks to Walmart expanding fundamentally from a strategic perspective. Yet right now, Walmart is trading like a grocery store stock. This means Walmart's PE, profit earnings ratio, price earnings ratio, is expected to grow exponentially in the future as the market slowly begins to realize, wow, Walmart is not just selling me apples. Walmart is technology, something more akin to Amazon. Of course, it's not Amazon on that scale, but what we're saying is that it's transitioning between sectors and it's growing. Now, let's go to technicals. As we see this yellow line, pay attention to this yellow line. This is the long-term trend line support line. This dates back all the way to 2018. It's been following this trend. Of course, it goes up and down, but this is the general trend of the price action of Walmart. Over like 2 years now, it's followed this trend line. And guess what? There's also a horizontal support line at this price level as well. And MACD is about to cross over. And look at this hammer. Again, like we talked about earlier. Hammers are very, very bullish. They're bullish in a downtrend because hammers are reversals. Look at this body. Very, very tiny body and a long tail. That's a hammer. And let's look at the 5-minute chart. It's reflecting on the 5-minute chart. It bounced down to support. And it hit support. And support held. And look at all this buying pressure after it bounced. Bam. And look at the volume too. The volume is very, very bullish to me. Especially at year end, on market closed, on a long weekend. There's a lot of positive volume on Walmart. This speaks to a potential bounce next week, which is very, very likely in my opinion. In our opinion, at least. What we're saying is that it's not going to bounce all the way up here in just a few days. No. But what we're saying, again, is that it's going to bounce. Like here. When it hit the trend line, it could bounce. We're not, of course, once again, we're not saying it's going to bounce, go straight up, right? It could bounce, go down, bounce, go down, bounce, go down, bounce, go down. But what we're saying is that in the next few days, prepare to see some positive gains on Walmart. However, something to note for you traders out there, because we all have different time horizons, different risk tolerance, for example. Walmart currently, once again, is trading like a grocery stock. That means a lot less volatility. The average change per day is less than 1%. For example, right? Just pick any candle out here. Look at the percent gain up here, all right? 0.46, 0.1, 0.01, negative 0.1, negative 1%. Even on the positive, look at this bullish engulfing candle, right? Bullish engulfing candles are usually pretty strong, but guess what? 0.9%. So what we're saying is, if you're looking for high profits, large profit potential, perhaps not looking to Walmart because even if it bounces, it's probably going to bounce like 1% at most. So could be other better options out there if you're looking for higher profits. However, another way to profit from a low percent change stock is through options. Options give you leverage, and perhaps if you buy like a long dated options today and it goes up tomorrow, if it goes up 1% tomorrow, it could go up, for example, even 5%, depending on what option you have, what expiry date, what strike price. Yeah, that's pretty much it for Walmart. Expect it to go up next week, bounce. Of course, it could hit this resistance point. Let's draw this on the chart right now. This could be a heavy resistance. So, for example, if you buy tomorrow on Monday, it bounces up here. Prepare to take some profit off the table just in case it bounces back down. Right? That's it for Walmart. Alright, next on our list we have CRM, Customer Relationship Management, aka Salesforce.com. Right? Earlier this year, we saw, bam, a huge gap up on earnings in August. This coincided with the gamma squeeze for the entire market. So let's look at the entire market. Let's look at the Qs specifically. Look at this, gamma squeeze all the way up and then flash crash. It gapped up tremendously, CRM, during that gamma squeeze. However, after the recent earnings report, it gapped all the way back down. making a very, very weird and interesting looking chart. However, why do you say buy this stock? Why do you want to buy this? Let's look at the technicals. After it gapped down, it held a very, very significant support, which is the all-time highs prior to the gap up. This is a very, very crucial support level. And why do we want to buy now? Because it's currently at support. And what else? Let's look at the exhaustion in selling. For example, I traded this all the way up to the false breakout. This was a false breakout that happened about a week ago. And afterwards, it sold off, right? Natural. After a false breakout, people lose faith in their stock and start selling. But let's look at the progression of these candles, how these candles look like. First, we have a red bullish engulfing candle. That means from the beginning of the day to the end of the day, it went all the way down. However, next day, we have some tails. It means uncertainty, some bid. It went to an all-time low and bid up. Same pattern here, same story, right? As we go down near the support, we see exhaustion in selling as more bid comes under the stock. And finally, last Thursday, which is the last trading day, we saw a green candle, our first green candle, and guess what? It's a hammer. What this means, let's look at the 5-minute chart. Again, market open, flash crash down. But guess what? It held this level, held support. And intraday reversal, all the way back up. This is where it opened, mind you. This is where it opened. And it closed above the open. First green candle on selling exhaustion and crucial support level. This is everything speaks to a bounce, right? We're not saying it's going to bounce all the way up here, right? No. But we are saying in the next few days, it's going to get a bounce up. Where it bounces up, we're not sure, but it is going to bounce up, and there's a perfect opportunity to scalp a few percent. Alright, last but not least, we have Lululemon. They sell women's sportswear, women's leggings, athleisure wear. They might sell some men items, products, I'm not too sure. Right now, we're merely looking at the technical perspective. Let's focus on the daily chart on the right. Let's analyze the overall price action of Lulu. As we mentioned earlier, this was a famous August gamma squeeze when the market just exploded, right? When option makers tried to make their position delta neutral and kept buying shares, and then that led to more people buying shares, bam, right? And then it flash crashed, naturally, back down to a previous support point at 280. As we see, perfect bounce. We rode it all the way back here, made tons of money. Thank you, Lulu. And now we're ready to claim all-time highs again. As we see, this general trend to claim all-time highs. Again, this drop here was not because of any major company news. Of course, there's earnings that led to gap down even more. But this was paired with selling pressure in the overall market, which led it to fall down way lower than it should have. And now we're trying to reclaim all-time highs. And just a few weeks ago, one or 2 weeks ago, it tried to reclaim all-time highs, right? We see here, perfect bounce at trend line. And in just a few days, it went from, 330 to 380, $50 gain in just 3 or 4 days. However, this went up way too quick. Way too quick. And then that led to a false breakout on 1218 paired with bad market conditions, right? People want to take profit after this short-term tremendous gain. Usually, it's a healthy gain looks like this. Up. Not this, right? So people took profit. There was a false breakout and it broke down naturally because once stocks failed the false breakout, they want to retest support just to make sure there's that assurance there, that base. And then after that, it bounces up. That's exactly what happened. We look here, last week, bam, all the way crashing down just as fast as it went up, right? Because it wants to retest this level. No one wants to hold by here, for example, because it needs to retest this trend line. And then now we are perfectly at this trend line, ready to bounce once again to reclaim all-time highs. Again, we're not saying it's going to reach all-time high ASAP like this, but what we are saying is that we're going to be seeing some kind of this, right? Up a few percent every day, until the next resistance level. In this case, probably this level once again. So we're gonna buy this into the week, and then we're gonna ride it up all the way here. Remember to take profit on the way up and sell at resistance and buy it back in once it breaks resistance and breaks all-time highs. And what else? Selling pressure for breakdowns. We want to focus on the volume, right? Let's zoom in. Look at it. The volume going up was 3.8 million, 4 million. The volume on the way down, it gets lower and lower and lower the closer it approaches the long-term trend line. As we see, the volume is very low, like not even a million. It's cracking because no one wants to sell anymore because it's already been sold off. Now it's just the buy area, it's the buy signal. MACD about to cross over. We're expecting this to bounce up at least around 370 in just a few weeks. And that wraps it up, guys. That's it for the top 5 stocks I'm watching this week. Leave a comment, like, subscribe, whatever you want. If you're wondering what broker and what platform I'm using to trade, I'm using Webull's desktop platform. There is a referral link, my personal referral link, at the bottom in the comment section. Well, not in the comment section, in the description section. And if you join using my link, you get $100 in stocks. Right? If you're gonna join anyway, might as well get some money from my link. And that's it. Thank you for watching. Like, comment, subscribe. See you tomorrow.